Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. Memorial Day is coming up, so that's really exciting for those who can get a 3-day weekend. But keep in mind, Memorial Day is about those who have served and have passed away from that service. So just keep that in mind on how you're celebrating. But for the most part, really looking forward to a nice weekend here in Washington State. And we'll give you guys a quick update that's happened, everything that's happened with this whole Iran conflict last week, and what we're looking forward to this week. Before I get right into it, gonna do a quick dad joke. Quick dad joke today is, did you guys hear about that kidnapping that happened this last weekend? The kid woke up. Get it? Kidnapping, kid woke up. Pew. All right, so getting right into it. At the beginning of last week, the idea of this whole conflict was that Iran was going to send a memorandum of understanding on what they wanted, right? And then they did send that last week, including all the stuff they wanted, which is like reparations for all the damage that was done, the nuclear enrichment program, and a few other things. Of course, the President Trump denied that, so we're back to where we were still, maybe like 2, 3 weeks, maybe 4 weeks ago, in terms of not knowing what the next step of this conflict and its resolution. In addition to that, we had two inflation reports that came out that shot up higher. Now, this was kind of expected and it was very explainable because of how much oil prices have gone up since the start of all this. Just keep in mind, oil prices were around $60, $55 a barrel before this Iran conflict started. Then they shot up to about $100 a barrel and maybe have gone as low as 84, 87 to as high as 115. So right now, what's tough about those oil prices is that they're still elevated. They're still in that $100 a barrel, like about 106, 107 if we're looking at the top of this. Compared to yesterday, they're slightly lower, but not by much. We're still looking at $107. So that's what's really tough about this conflict and its impact on oil prices. In addition to that, the reason why I bring up the inflation reports is that with all these things happening, the memorandum of understanding denied by President Trump, the two inflation reports that went up, it also caused mortgage rates to go up as well. And unfortunately, and I hate to say this, we're at a all-year high for 2026. So we're a little bit higher than the peak where we saw at the end of March. So we're about here. We're slightly above that right now. So for me, that's kind of like a tough spot to be in for a lot of people right now. To me, I also see I see a technical signal of a potential reversal. They call it a double peak. So if you guys ever heard anything when it comes to technical analysis, double peaks generally mean that we will see a reversal at some point. But the tough thing with mortgage rates is that they move so slow. They move a lot slower than stocks. They move slower than crypto. So that's what makes it tough of what happened last week. We had consumer price index inflation report come up about 0.6%, and then producer price index inflation report go up by 1.4%. Now, what sucks is that during this exact time on Friday, when these inflation reports came out, it was like Wednesday and Friday and Thursday, when all this news comes out, the new Fed president took office. So really tough for that guy to go into the office and seeing all these things happen. Now, there is a lot of hope for this new Fed president. Hopefully he can correct what the previous Fed president did and also set us up for future success based on everything we know about him. So if you guys want to know more, do some research on Kevin Warsh. A lot more, I guess, grounded in terms of what needs to be done financially in terms of the nation's economy. So overall, right now, mortgage rates are elevated. They are at currently a 2026 high, which is not great. So hopefully we can see some more info. I mean, we haven't been this is probably the highest we've seen since the end of last year, but since December. So it's kind of tough to see in these numbers. We'd hope that we would get back to, the pre-March levels, where we were, if you guys kind of see this chart here. And then we would just resume on. But, with this Iran conflict came at, I guess, depending on how you look at it, either the worst or the best time, we are seeing really elevated mortgage rates. So we do expect as soon as this conflict is over, they get to an understanding, we get to a resolution, mortgage rates will come down toward levels before March, and then maybe we continue on to see the levels and the forecast we expect to see moving forward. So, and the forecast was to see the mid and low fives by the end of this year. So, I think this conflict has lasted way longer than expected. We just need to get moving forward. Right now, it's kind of like a stalemate. There's a U.S. blockade that's keeping Iran making $500 million a day because, or they're losing $500 million a day because the blockade is in existence right now by the U.S. And at the same time, the Strait of Hormuz is closed. So I think Iran's in a tough spot because they're running out of space to store the oil that's being used, and then also they're losing a lot of money every single day to the blockade that's happening. So that's kind of a tough spot that we're all in. Of course, we're also impacted by the consumer with oil prices the way they are. Also probably impacting the price of other things that uses oil to make whatever goods we need to make. So everyone's suffering, but I think Iran is probably suffering the most just because of how much money they're losing over time. One thing I do want to add is that since the start of May, Washington State is probably going to have much more competitive timelines on VA loans. And the reason why I bring this up is that certain counties that have a relatively high military concentration, typically the ones around the Puget Sound area, the counties, yeah, you have Kitsap, you have Lewis County, you have Snohomish, Pierce, King County. I think Thurston County is in part of this, is where the appraisals are now 8 business days. So before it was 14 business days before May 1st. Now that it's 8 business days, this is almost the same timeline as it is in like South Carolina, where we can literally close within probably 21 days. If everyone, gets everything, the lender needs and lender is on top of their stuff, you can probably close VA loans in easily less than 25, 21 days in those specific counties. There's some other counties that have a little bit less military concentration. There's a whole list. I posted it in my one of my Facebook groups. But yeah, there's some that are 10 business days, and then there's the rest of the Washington State is about 14 business days still, just because there's not a whole lot of VA going on there anyway. But that gives all the counties that have high concentrations of VA transactions to be able to be more competitive in their timeline, which is really great for VA clients. So hopefully that news gets out and you guys can apply that. And as buyers agents, you can definitely use that information. As sellers, you can advocate for a seller's VA offer, saying, hey, we can actually just be as competitive as far as timeline goes as conventional. Otherwise, that's about all I got for you guys this week. If I don't see you guys again, happy Memorial Day, and I will talk to you soon. Nuke out.